Hi everyone, this is Rob Roy of LA Wave Options, and welcome to TradeFinder Live. If you're new, we have to go through, it doesn't matter whether you're new or not, but we have to go through this disclaimer anyway. And so if you are new, take a screenshot of it, save it. The two primary things that we want you to know is that we are not licensed to give individual investment advice in the United States, and any pricing that we're talking about is donated in US dollars unless we note otherwise. So those are the two primary important things. But again, take a snapshot, take a look at it at your leisure, and then we'll move forward. While you're taking a quick glance at that, if you are new, just to give you a quick rundown. The way we do the trade finders is start off, I'll go through, give you a little bit of an idea of what's going on in the market. We just finished a quarter and there's some interesting things that have occurred. So I'll update you on that. We'll take a look at the charts. So we'll go through, update what is occurring in the market. We'll take a look at any alerts that we may have closed for our subscribers on our website. So you get a chance to see what our website looks like. We will review some of the case study considerations that we've selected over the past trade finders, and then we'll go through and see if we can find one for this week. I don't know if you followed last week, but you'd have to say that's pretty close to a home run if you did. So with that said, let's go ahead and move forward. So I'll take this off and we'll bring up the market itself. So here's the market, and what I wanted to mention to you as we turn the LA wave on, a couple of things of note. One, that we still have this wave 4 labeled. We came down into the area to test that wave 4. We didn't quite
interrupt. Need to get you to share the screen.
Remind me. While I'm going through this and trying to remind you of this, we did a test. So want everybody to be excited to note that we did a test with our subscribers at the end of last week on Zoom, so that we could have better quality for you and not have to go back and forth and rely on my old memory to remember to switch the screen, etc. The subscribers absolutely loved it. So starting next week, you will see the Trade Finder on Zoom. So that's some exciting news. The charts will be easier to see, etc. And I won't have to remember to move this over. And besides the clarity, the subscribers came back and said it was awesome. They absolutely loved the experience. So that's coming next week. All right, so back to the chart of the market. Thanks for reminding me, guys. This is a really interesting point right here. You can see where the market is finding support. We're nearing that 38.2% fib corrective level. We came down and now we just tested that again, bounced back to the upside today. And we have these gaps here. Now, I would have felt better if we had come down and filled this gap. I thought we might. If we take a look at volume, if you colored the volume bars, you would note that volume had been a bit higher on the down days, because you can see it's up, down, moving back and forth above the average line. And on the, you can't do that on here. I'm just not going to take the time to do it, but using the software. By the way, so many of you ask about this software, and I mentioned to you last week that it was going to be available sometime in July. Well, literally, we are within days away of the new software release, and it is so cool. I'm going to show you, a tool or two that people always ask about, how do you get that and stuff. But the new software release is coming within a few days. And if you want the best LA Wave software that exists out there, this is where you want to go. So go to hubb.com and learn more about it. But the new release is just, it's freaking cool, really. All right, so I would have felt better if we came down and closed this gap, but we didn't quite come down there. And what's been going on, normally if you saw this, if you saw bigger volume on down days than on up days, you'd be thinking, okay, that's distribution. And that's not a positive sign for the market. And it still may not be, and it still was distribution. But what's been going on is pension funds, because we're at the end of the quarter. We had an update today. It's the last day of the quarter. So investment managers tend to try to run the market up on the last day if they can, because that's how bonuses are determined, et cetera. So normally the last day of a quarter tends to be a good day. And then tomorrow we're going to have the first trading day of a new month, which is when new money is put to work on money that comes in through dollar cost averaging plans, IRAs, 401ks, et cetera, in the U.S. or retirement plans in the U.S. New money is put to work. So it wouldn't surprise me if we see another update tomorrow. Futures are pretty flat at the moment, so not giving much of an indication, but certainly not any sort of a downward move from the update that we had today. But what's been going on is pension funds have had to rebalance. And so they've been heavily invested in stocks. So there's been a lot of selling in stocks as they rebalance their positions of not just moving from stocks to bonds, but also within sectors and whether things are considered to be conservative or value or growth. All those considerations have been occurring over the last week, which has a lot to do with these bigger volume bars on down days. So my point is, it's hard to know whether this is true distribution out of the market itself, or if it's just simply what's been going on with the pension fund rebalancing, because there are some massive pension funds that exist out there. So it's billions of dollars that we're talking about that have been having to sell equity shares to move into various other securities. So the money managers were able to push the market to the upside today, moving into the last day of the quarter, even with that rebalancing going on. So the support level, finding this major support right here around the 300 level is quite interesting. And then if we take a look, let me take volume off and put the DMI back on, you can see that the ADX is like, not so excited about what's been going on, which you would expect, kind of a sideways move. You would have liked to have seen, and remember that the ADX of the DMI, if you watched our TradeScan web series, you learned the intricacies of these confirming indicators that we look at. You would certainly would have liked to have seen a tick up in the ADX with that move to the upside today, and we didn't get that. And we still have technically the sellers in control. But again, it's hard to know if that has to do with the market in general or just simply what's been going on with the pension fund rebalancing. So not a very clear signal out of the DMI. Let's look at the moving averages. We did break back above the 10-day moving average, which is important for short-term momentum. And we're above the 30 and the 50-day. And notice where the 50-day moving average is. It's right at that support line that I've drawn, which is where the wave 4 was created and tested on both the 26th and then the 29th of June. So it makes sense there. But as I mentioned, I would feel a lot better. Maybe we go up. I mean, we still have this island reversal that has not been satisfied. So you have to take that into account. That hasn't been closed, which means that the downside is still in play. And the fact that we haven't closed this gap here, we'll close this one someday, probably well into the future. But this one's not as far away. And I kind of thought when we were heading down here and with the end of quarter rebalancing that we may get down and close that gap. Didn't happen. I would have, as I mentioned, preferred that for a move back to the upside. But we'll see. We had Chairman Powell that came out today. By the way, follow us on Twitter or any of the other Instagram, other social medias. You can go to our channel on YouTube, and all the particulars are listed there and how to follow us with social media. But Chairman Powell testified today with his mask on, I might add, and talked about how the economy was recovering faster than they expected. However, he was concerned with this recent spike. We talked about this in one of the last S&P 500 video updates, that I felt it was naive to think that we were going to start reopening everything without a secondary spike. Today is the first day, especially in the state of Florida where I live, where we had less new case. We'd had more new cases every single day for about 5 days in a row. Today we still had a lot of new cases, but at least it wasn't more than yesterday for the first day in about a week. But he's concerned about that, and there was no indication whatsoever. The futures did dip down while he was talking to Congress, but as soon as he finished, excuse me, the market dipped down while he was talking. As soon as he finished, things went right back up. We finished, as you can see, nicely to the upside. But he gave no indication that their Federal Reserve is considering at all turning off the liquidity pumps, which is going to lead us into what I wanted to share with you as far as our website. We actually didn't close anything this week from last week, but I wanted to show you a case study that we have, alert that we sent out for our subscribers on GLD. We already have one on SLV, which also had a really nice day today, but I want to focus on GLD and show you the chart of GLD. But in a nutshell, that's where we are with the market, holding these major moving averages on a support level right there at 300. It's a nice round number, moved to the upside today, but until we come up and close this gap here, you have to respect the island reversal with this move to the downside. And last but not least, you could certainly draw a descending triangle here, move this support line back over here, and indicate that we have a pretty decent descending triangle, indicating that the market could break from here significantly one way or the other. And don't forget that it's June 30th, so we move into July tomorrow. Election's not that far away. And I think everyone would agree that at this point in time, the outcome of the election is in doubt. And with that kind of uncertainty, the market tends to not like uncertainty. And so we'll see how that starts to factor in with volatility in the coming weeks. Can we make this run to the wave 5 before then? Or are we going to break to the downside and create more of a wave 4 lower? We'll have to wait and see. But really interesting things going on. But I wanted to make sure you were aware that rebalancing was significant, and it has to do with what's going on in the market. So we have to keep that in mind. All right, so let me show you the case study, and let me make sure that I switch over and that you're seeing the correct thing. Are you seeing GLD from our website? Is everybody seeing that on the screen? Are we seeing that? Yeah? Huh. So weird. I didn't have to change it that time. Crazy. Last time I did, this time I didn't. So here's GLD. Here's the alert that was sent out. And you can see the entry alert was sent out on June 17th, and it's a strangle. It's an August strangle, so it's not super far out in the time. So when we look at these strangles, just to give you an idea of the way it works when we send out alerts, is we look for 30 to 70% is the range of the profit returns that we look for in these strangles. So 30% is when we start looking, okay, where are we? Do we want to take a look at maybe taking some profit, or things are moving well? The indicators are telling us that current breakout move could continue. So we wait a little while and we get more of a breakout, and that's where we hit the 70% move. So here is the chart when we send it out, which is a little bit unusual. Looks like you're still seeing that, where we had kind of a trading range that moved into a symmetrical triangle. So that was the 17th of June, which is what it looked like when we sent the alert out. So it wasn't a typical large formation of a symmetrical triangle. We had a sideways move for a while. So what I want to do then is bring this chart back of the market. And again, it looks like you're still seeing that. So here we are on that 17th of June. I'm going to add in the DMI because you can see that the ADX had just broken down underneath 13. We place a lot of emphasis on where the ADX is on these triangles because it tells you how long the consolidation has been going on and gives you an idea that the breakout is likely to come sooner rather than later. So this is the day that we sent the alert out. Here's that same chart pattern that we sent out to our subscribers on the alert to get in. And there's that symmetrical triangle following a sideways trading range. Again, a little different, than the normal setup, but with the ADX giving us that signal that, hey, it's pretty quiet, we're ready to move. That was the entry, and then here's where we are now. So you can see that we've moved and broken nicely to the upside. And with a triangle, remember, you're buying a long call, you're buying a long put. We're trading them out of the money. So the strike price is out of the money, and we're putting the math in our favor. So we are mathematically guaranteed to make money as fast as possible on the breakout. But we still have one option making money and one option losing money. If you do a straddle, you have to get a bigger move out of the stock before you begin to become profitable. But by placing the strangles the way we do for our subscribers, the breakout occurs and we can make money as fast as possible. So where we are right now on the close today with this breakout is now the call option has made enough to significantly offset the loss in the put. So any movement from here becomes pure profit. So when we take a look at the Elliott wave pattern, it's forecasting a move all the way up to, say, 172 or so on the GLD. A reminder, however, that Elliott himself said the corrective patterns take precedent over the Elliott wave pattern, but I think we could all agree that the Elliott wave pattern has now been confirmed with this upward breakout. So I don't think it's breaking Elliott's rules to take a look at where that wave 5 target could be. And also the fact that the wave 4 was 29% is still kind of in the wheelhouse of this whole thing, this entire move. It wouldn't be out of the realm of possibility to call that an impulse move, and the fact that we have a complex wave 3 that could be relabeled down the road. We'll see. Now, let's go back to the fundamental side, which we don't do a whole lot of at Elliott wave options. But if we have the Federal Reserve that's willing to keep all this liquidity going, and the Federal Reserve is admitting that, hey, the economy is doing better than we thought it was going to, but we're not going to take any of that liquidity away. So if the economy does do well and continue to move forward, and maybe this spike on reopening starts to come down a little bit, the market has not seemed to be concerned about the fact that everybody said that the summertime was supposed to keep the virus down, right? The virus wasn't supposed to do well in the heat. It was supposed to be in the fall or winter time before we saw this kind of a spike. But we're reopening. People, they're not really following the guidelines of social distancing and wearing masks, and people are doing their own thing. So, a little bit of a spike now. Is that just because of the reopening and then it's going to calm down and we've seen what we're going to see? That's what the market is tending to lead us to believe, unless after we get, again, we should have a decent open at least tomorrow with new money being put to work for the first trading day of the month. Then we'll see. But we also have a holiday week. People are probably going to take Friday off since the 4th of July is on Saturday. We'll see how that trades out, take their long weekend since they're not getting an extra day off with the 4th of July falling during the week. But the market doesn't seem to be all that concerned with the virus cases. So if that starts to come down, market moves forward, all this liquidity, you can easily see why the metals are going to continue to move higher. That's my long-winded point here. So if we move up to this wave 5 target, then that's a nicely profitable strangle. So anything that moves to the upside from here is all profit out of this position. So wanted to go through and walk you through that, especially with the fact that this is not necessarily the classic technical pattern that we use. Yeah, there was a little bit of a symmetrical triangle here, but we had a lot of sideways stuff in a trading range, which is not normal. But the fact that we had our ADX giving us what we were looking for, and notice the ADX now. The ADX is liking this move, unlike what we just showed with the market, where the ADX didn't really curl up with today's move. The ADX is showing that this move has some strength to it to the upside and likely to continue. So that's some particulars on a current case study that we have for subscribers on our website. So let's go back and look at some of the previous alerts that we've done, or case study considerations that we've done on the recent TradeFinders. I don't want to go all the way back because we've done that before. So Apple, this is going back 3 weeks to Apple. And this becomes, you know, at what point do you want to take profits? We talked about this last week, that you could have taken profits on this big spike to the upside, and we had a gap. Gaps get filled, so the gap got filled, settled down a little bit. Now we've moved back higher, and you know, maybe Apple continues that run up and hits that. It's hard to imagine Apple not running up and hitting the $400 level at this point. Looking at the DMI showing that the ADX is still strong, but the strongest part of the move is over. The positive directional indicator is showing that buyers are still in control. So we could have like a little bit of a drift up towards that 400 level. So the move is strong. It's just the strongest part is over. That's the important thing to take from the DMI there. So a little bit of a drift higher. Looking at the moving averages, we're following along that 10-day moving average, which is exactly what you would expect on a trending stock, following the 10-day short-term moving average. But you know, you could have easily taken profits back here and been happy. That's where you have to decide, you know, at what point in time do you want to take profits. And then 2 weeks ago, we looked at ZTO. And that one really hasn't done a whole heck of a lot this week. As you can see, we're still in the wave 5, just holding on to that 10-day moving average by our fingernails, just barely staying on there. But the important thing is that we're holding above the recent wave 3 high, pardon me, which should act as support on any further attempted move to the downside. So from looking at this chart, there's nothing to lead you to believe that maybe we should move out. It was 2 weeks ago, so the stock did make a pretty nice run. It would have been a profit, but a small profit had you close it out on this big spike higher. But there's nothing to show that this may not turn and head back and reach that target, which was the original target that we had in mind anyway, on the wave 5, which is up around 41. And then last week, if you were with us last week and you followed along with this, you're a very happy person, because look what happened with Match. Look at that move from last week. So if we look at last week's, there's where we were last week in this position with the LA wave on. We knew we were in a wave 5. We also knew that we had this really nice zigzag pattern, just as classic as it gets. So forecasted move that we talked about was we're in a wave 5. And we have a 92% extension. We're likely to going to go to 100. That's what we looked at last week. And then just it's taken off. And we've blown right through that 100% level without even thinking about coming back and testing the previous level. Remember that normally with Elliott wave rules, so we're at 120% extension now. So that's been a 28% move in the stock. Imagine what that would be in the options if you followed along. That's a really nice optionable trade with the leverage involved. So normally when you hit the target price, which would have been the 100% extension with LA wave, quite often you come back, retest the previous level before you go up to the next level and move to the extended level. We still could do that. Honestly, yesterday's trade made a lot of sense. Today was a bit surprising that we continued, pardon me, the upward move without any sort of a retest of the previous move. We just continued higher. We may go right up there and move, but you know, at this point it becomes how much profit do you want to take? When do you want to close things out? That's one of the things with becoming a subscriber for our website is we send you out alerts, not just the entry alerts, but the exit alerts as well. And we use our indicators to help us. Are we perfect on the exits? No, but we're pretty good at seeing when the indicators are telling us, you're getting to, you know, at least an overbought, or if it's a downside oversold position, and probably a good time to go ahead and take profits. So we send out entry adjustment and exit alerts to our subscribers. So that may be a consideration to subscribe if you're like, well, where do I take my profits? When do I get out? Because that's the hardest thing, isn't it? Is you get in, you got to gain. Well, should I stay? Should I go? What do I do? So that helps you there, and we're not just throwing caution to the wind. There's a science or a math, if you will, behind when we send out the exits. And you go back and look and did a study over our exits and then what's happened after that, the record's been pretty good as far as, all right, we're getting to a point where maybe we're going to hit some resistance or whatever. It's time to go ahead and take our gains and go. But that was a fantastic trade from last week. So hopefully you all followed that and you enjoyed that position and have had a good week. And if you're still in the position, you might be starting to get a little bit greedy. Let's look at the moving averages, and you can see where the 10-day moving average is right here. So that's the 10-day moving average. Here's where we're trading now. So we are overbought by any stretch of the imagination. Stocks can stay overbought or oversold for periods of time, but we're overbought right now. And a move back, especially hitting that 100% level, is starting to get to the point where a reversal could happen any time. And you don't want to be getting greedy and then have a big, massive reversal and wipe out some of your gains. So we're here to guide you along. And a quick reminder on our alert subscription, you can go month by month. Just give us a try, see what happens. We don't charge you for a year or anything up front. There's no contract. Kick the tires, see what you think. See if the alerts are helpful to you on feeling confident on your exits. All right, well, let's go ahead and take a look now. So I let you guys pick last week with where the market is. Let's take a reminder of where we are now. We still have this technical descending triangle. We had a little bit of, last week we were talking about this kind of a symmetrical triangle, and we didn't really break out of it yet. So we created this descending triangle, but nonetheless, it's still a triangle. That 300 level is still support. It was the bottom of the triangle before. It still is now. Just we've morphed into a descending triangle from the symmetrical one. And last week I asked you, did you want to look for a non-directional breakout like a strangle, or did you want to look for directional trade? You guys did directional, and so we ran the directional search, and that's where Matt showed up from our search parameters. So we'll do it again. Which one do you want to pick? I'm looking for answers from you guys. Do you want to go directional or non-directional? Leave it at that. Directional. I can tell that we have a greedy group here that watches, because the directional trades make more, right? And when we look at our two portfolios on our website, the impulse strategy is the directional one. Over time, it's done better than the non-directional one. They're both profitable, but the directional one, you're going to make more money when you get direction right. It's as simple as that. The non-directional one has less risk, so it's profit risk, right? The less risk you take, the less potential profit that you can make. And so obviously you guys know that with the fact that you're going to have a call and a put on the strangle. So you want to do directional again? Well, let's see. We can go to scanners. And remember, if you are a subscriber to Elliott Wave Options, when we click the pre-computed scans, this comes up for you already. That's why it says Elliott Wave Options here. So the parameters for the searches that are created are already included in here. So you don't have to input the parameters and run it manually, any of those things. It's all already here. So let's take a look. There's 3 to look at. ResMed, West Pharmaceutical, and Logitech are the 3. So let's take a look at these charts. Look at that. The consolidating stocks. Remember last week? Last week there was 140, and I said, wow, that's a high number. Now it's up to 200. So what you're seeing, let's think about that for a second. So the market has continued to consolidate, right? Because we went from a symmetrical triangle last week to a descending triangle this week. that's still consolidation. The market hasn't broken out. We've had up and down days, but we haven't broken out one way or the other. Now the market is showing us that there are 60 stocks, 60 more stocks that have triggered our indicators for consolidation than the previous week. So more stocks are consolidating as the market has. That all makes sense. And the fact that the market has consolidated, and you guys wanted to pick a directional trade last week, and we picked match, and we picked one that made a massive directional move in our direction, I think that shows you the power of the indicators that we look at, right? I mean, because we're kind of going against the grain here. There's 3 stocks that are in our upward directional bias, our indicators. There's 200 that are showing consolidation, which obviously you would probably throw half of them out quickly by running through the search, but you would find a great deal of non-directional patterns to choose from, much smaller here. So the fact that we found when the market basically went from a symmetrical triangle to a descending triangle, and we found a bullish stock that made a tremendous breakout, this should give you confidence that our technical system has merit and works. So let's take a look at, we'll just look at all 3 of them. ResMed is the first one. So we know, again, if you were in the TradeScan web series, you know all this stuff means. So let's take all this stuff off. And let's just look at the Elliott wave, because that's what we do, right? We start off with all of the indicators, and then we apply Elliott wave. Now this one, is just blown above. It just sounds familiar. Did we look at this last week? It seems like we looked at this one last week too. Remind me, I may be wrong, but I know I've looked at it. I don't know if we did it as a group last week or not. But I think we were talking about last week that we were right near this resistance, and that may be a point of resistance, and maybe we moved away from that one because of the fact that, who knows how the stock is going to react with this previous wave 5. Well, we know now. It just went right through it, like a knife through warm butter. So no problem there at all. And then we had this long. This is that blast off launch pad effect that I call it. By the way, thumbs up to SpaceX. Had another. I got to tell you, it is so cool to walk out in your backyard and watch a rocket go up. And that's one of the coolest things about living on the Space Coast. But SpaceX launched a rocket for the new United States Space Force that President Trump created. That was a launch today to launch some satellites, and it was absolutely gorgeous. Beautiful day. Could see the rocket clear as day. It was their Falcon 9, so it was their big rocket. Absolutely gorgeous. So thumbs up to SpaceX for another successful launch. And they brought the booster right back down, landed on a little platform in the middle of the water, hit it dead center. It's just fascinating technology. It truly is. Tesla was up big today. I don't know if that had anything to do with it, but it was. But this is that launch pad effect where you have a sideways consolidation and then you blast off. And so if you've heard me do any videos, you've heard me talk about that before. You get a real sideways consolidation. So it's building like a platform, like a launch pad. And then quite often the stock takes off from that. Happens a lot. That's what happened here. I think last week, a little concerned with how we might handle its previous 5. Obviously, that wasn't a concern. If you look at the stock now, let's look at the DMI. That looks, it's about as good as it gets on the DMI. That is stellar. So you have great separation between the 2 directional indicators. You have the ADX moving to the upside. It's breaking above 20, which remember is my more aggressive level. 25 is the conservative level. If you do research on the DMI, they'll tell you 25 on the ADX. I just never found that the ADX would break above 20 in a scenario like this and not break above 25. So I felt you could be a little more aggressive. It looks great. So it looks like it wants to continue. If we have any issue at all in this, it's the fact that we're just a tiny bit overbought. So a rest day, if this was one that we wanted to select, hopefully when the market opens tomorrow, it's quiet or maybe even pulls back a little bit. Hopefully it doesn't gap up and take off some more from here. If it does, then maybe we have to rethink whether we would do that. But let's take a look at this zigzag pattern here. because there it's an impulse. And you can see that we hit the 61.8%, and then we kind of just went sideways for 2-3 days. And it looks like we're at 192. 200 seems like a no-brainer. And the zigzag pattern would say we're going to go past 200 and hit 212 would be the potential. Because remember, we're not in a 5-wave pattern. Software is not labeled a 5-wave pattern. So you default to the corrective patterns, which I do all the time anyway. But that looks pretty good. Let's go back and look at the other ones. WST, which is West Farmer. Now that let's take a look at that, because that DMI doesn't look anywhere near as nice. We're moving to the upside. Let's put the daily wave pattern on. We're in a wave 5. Looking here to see if that's a zigzag here. It is. So we're kind of at the same spot that I think we were in with ResMed last week. We're right here at the previous, in this case, it's the previous 3 high. With the other one, it was the 5. But the ADX hasn't broken above the negative directional indicator yet. It's trying. It did kind of tick up today, which is a good thing. The market didn't, but this one did. So we had a nice up day with a little bit of strength, indicating that we could very well break between those two. If we're going to follow the rules to a T, which you always should, anytime you violate your rules is usually when things go wrong, because you think, oh well, yeah, look, tomorrow we're gonna break between them two. It'll look good. Technically the negative directional indicator is a touch below that, but I would like to see it clear these little 2 bumps here and be really in the open air, if you will. But we could do that one if you wanted. I don't think it looks as good as the other one, personally. And then last but not least, Logitech. I like this DMI better. So we had a nice run, a little strength pull back, but the stock didn't. It continued to move to the upside, even with the ADX pull back. And this is accumulation. See these little tiny bars? This is like under the radar type accumulation. That's why you look at this average volume and you see that we're above average volume, but you don't see too many of these spikes. We did back here. We had some spikes, but that's because we broke above that wave 5 high. So some money came in, some institutional money came in there, a little bit here, but they're just kind of sneaking in under the radar. So there's accumulation occurring here, but nothing that is showing like a blow off top type. And this is what I was wanting that DMI on West Farm to look a little bit more like, where we're in kind of clean air between these two. So the positive directional indicators indicating buyers are still in control. Had a nice update today. Sellers are waning again. The ADX did curl up, showing that there was legit strength to that move today. We're in a wave 3, and there is no zigzag there. That is just a flat impulse run right there. No zigzag, no corrective move whatsoever. So the naysayers, or if you had to try to find a negative, would be, well, there hasn't been a correction yet. That's been a heck of a run without a correction. So when do we get one? Very, very difficult to figure that out when you don't have a zigzag pattern. So if there's no corrective pattern in the wave 3, it becomes very difficult to figure out where the correction is going to start. But a lot of money has been lost on, saying, oh, well, we're probably due for a correction, and then watching the stock run. You're better off to go further out in time, and if it does correct, to adjust with the correction, than to just sit back and say, well, I don't want to do this one because it's due to correct. It's been running so long without a correction. Look at that. 10-day moving average there, nice 45-degree angle. See the angle that I drew the red arrow? That's the accumulation. Those are the trends that tend to stick, not these vertical moves where you get a stock that fires up to the upside, that blast off thing that I talked about. It's nice when you catch one of those, but they tend to come back down, just like the boosters on the rockets. They tend to fall back down almost as fast as they went up. But the 45-degree angle moves tend to last. I mean, going back, this really is there's nothing for it to come back and test. Really, it was just we're just moving up. We had the volume when we broke above this wave 5. You had the big volume spikes. Obviously, massive institutional buying occurred right here, right at the middle of May. And then it's been under accumulation ever since. So that looks pretty darn good. We're trading at 65, target price of just under 75, call it like 74. Anywhere from 71 to 74 would be your target price range. So ResMed and Logic, they all look good, but I think that number 1 and 3 look the best. So I picked match last week. So between ResMed and Logitech, let's throw it to you guys. Which one would you pick? You're not seeing the chart? Oh, you don't know the symbol for Logitech is LOGI. Yeah, next week, not going to have to worry about that anymore. Next week, you're going to have the clear pictures, big thumbs up from our subscribers, good to go. This is the last time we're going to have to deal with this cloudiness. So we apologize, and we're always trying to make your experience better. So you don't have to worry about that. But LOGI is the symbol for Logitech. Oh, wow. This one, we should have done a poll here. Can we do a poll real quick? Is that asking too much, guys? Because it's kind of balanced. There we go. Look at that. How good is that? Customer service. Woo! It's neck and neck. That's what I thought. That's what we want to do the poll. Well, should we do them both? I mean, it's 50-50 right now. 60% of you have answered, and it's 50-50. That's freaking amazing, isn't it? Wow, that's incredible. That's fascinating. The polls always fascinate me. They really do. It just shows the mechanics of trading. It really does on people's viewpoints. It's how the markets work. You guys are just a perfect example of how the markets work. All right, let's watch them both because it's 50-50. Thank you for your participation, but it's dead on 50-50. So I don't think we've done that before. So let's do that. Let's just. You're greedy if you're still on match, by the way. So that one should be closed out. So let's do LOGI and RMD. So I'll make a note of both of them because the results are just dead on. All right. Quick announcement. Humorous, but funny quick announcement is that I'm going to be doing a new S&P 500 market update tonight. And if you watched the last one, you saw that I had a new hat, and the hat was huge. So this is going to be the last one with that hat. So you need to watch it. I'm going to do the market update. And then next week's going to be, or the next time I do one, is going to have a new hat. So we're trying to zero in on Trader Chuck's look, but that hat's just huge. So last one with the big hat, you got to watch it. So we'll talk a little bit more about the things that I talked about in the beginning here in the update. But with that said, I'm actually going to finish on time for a change. A few questions that I can answer before we go. You want to do another poll on whether the S&P, we do that one all the time though, and it's always 50-50 on whether we go up or down from here. I agree, John. That last hat, it's not a 10-gallon hat. It's a 20-gallon hat easy. It's huge. Man, I have a big head, and the hat's too big for my head. It's crazy. Question, do I think we finished the wave 4 down? Well, you know, John, the market doesn't really care what I think. With where we sit right now on the support line, I would have, right now I just watch the majority of the time I watch the charts. I offer an opinion when I have one. We have to respect the island reversal till it's closed. I do know that some of the higher volume selling has had to do with that pension fund rebalancing because they're massive. The pensions they're huge, they're big. So that's had something to do with it. And then tomorrow's trade is the first day of the month. So there's some buying. Even if we finish to the downside, there will be upside volume tomorrow because it's the first trading day of the month. So we're really not going to be able to figure out whether or not this wave 4 is done until Thursday. Thursday's trade will tell us a lot. So I know that's not the answer you're looking for, but that's an honest answer. Talking about January and June for the pension fund rebalancing. Take a look at AMD. We looked at this last week as well. We had a little bit of a triangle here. So it broke to the downside, but it held at a 50% corrective level. We're back up, hit the 50-day moving average on the high, closed right on top of the 10-day moving average. Actually a pretty big area of consolidation. So it did exactly what it was supposed to do. We have to break above these levels, so it's got some work to do. There has been, if you're looking for something negative, there hasn't been a lot of new money that's come into the market recently. There's been a constant rotation. So if you watch what's going on with the rotation, money has been moving from sector to sector, and it's revolving around. When you have a lot of new money that comes in, you don't get that the sector, the money moving from sector to sector as often. Money comes in, then you get the rotation, and then it stays for a while. But when there's less money, the rotation happens more often. And that's been occurring. The money is moving a lot now. So you get a stock that has a couple days, but there's no follow through. And that stock falls back down, the money leaves it, it moves to another stock, that stock moves up. That's how you can tell that there's not a whole lot of new money coming in. So if you were looking for something negative in the market in general, that's something to be concerned with. But as far as back to AMD, the gap up concerns me. Getting back to the 50-day moving average, you need to see it will come back to this midpoint because that's what they do when they break out of the triangles is they come back and test that midpoint. If it can break above there, then it'll likely go up and test those previous highs, but it's got to get there first. So it's got some work to do. And the sellers are currently in control, but pretty decent triangle breakout there. Can we consider this as this ABC as a flat correction? Are you talking about AMD or are you talking about the market, Luke? AMD. So we had this run, and then you could easily label this as a flat. Good call. Moving into the triangle. So you have your impulse, a flat, and a triangle. That's when we get into, and by the way, we're working on the new Elliott wave class right now as the follow-up to the trade. This is going to be some really cool Elliott wave stuff that I'm quite sure that feel pretty confident that you may not have seen before, but you start to get into things like this where you get into double threes. So you get, basically you get this move here, and then you go into the ABC flat, and then you move into a triangle. This is when we start to put together multiple patterns rather than just, one zigzag or one triangle or whatever. When you start to put in corrective patterns that are back to back, that's when it gets more in depth. So watch for that. We'll be talking about that, a release of that class soon, where we'll get into more in-depth stuff like this. But this is pretty cool. So you get impulse, flat, triangle correction, broke to the downside. So pretty classic stuff. But yeah, that was a good call. Johnson & Johnson, J&J. Well, I don't know about your grocery stores, but people have started, I don't know where how people can be running out of toilet paper, but just when stock was starting to come back in and be a bit consistent, now all of a sudden with this new wave, they're buying toilet paper again. It's like they could not have gone through all of that they bought the first time. So I don't know what people are thinking about, but pretty nice zigzag pattern to the downside here, hitting right at the 61.8% wave 4. The ADX is trying to curl back up, but the sellers are in control. So, people need to go buy more home products, I guess. It looks like this could break down. It tried to hold today, but tough to do anything with that one right now. The ADX isn't given, or the DMI isn't given a clear signal, and we're at a level of support. If we break that, then it's easy. So if we break this 4 here, then we're coming down here. So that part's easy. And we got to get back above the 50-day moving average, and then so here's your signals if you're interested, which you obviously are, in Johnson & Johnson. So this is no man's land where we're in right now. So if we can break above this level right here at 150, where all that resistance is, then you're probably going up here to 170. If we can't break above there and we violate this wave 4 that's trying desperately to hold at a major fib level, then you're coming back all the way down here. So that's what you're looking for with J&J. Does the wave 4 hold? If it does, you have to break 150. If you break 150, you're very likely going to 170. If it breaks below where the wave 4 is now, you're probably going down to 110. So there's your reading on J&J. Well, I appreciate the compliments. Thank you. Just wait till you see me with that big old hat on, and then you're not going to think I'm so great after that. Well, a lot of you like AMD. CMI, we'll look at CMI, and then what's the other one? Micron, and then we'll wrap things up. I can actually get you out of here on time. CMI is a nice triangle. Let's see where the ADX is. You could make a case for drawing it all the way from back here too, if you wanted to. Ooh, getting there. Not quite to 13, but boy, awfully close. Maybe tomorrow it might show up on the search. That's why I didn't recognize the triangle, because it hasn't quite shown up there yet, but maybe one more day. But wow, we're right into the point. So just to be clear, that we look for the ADX below 13 as one of the indicators for our triangle patterns, and the fact that they're likely to break out in the not too distant future from there. But stocks can break out at any time, and plenty of stocks break out when the ADX never gets below 13. The reason that we utilize that level is because when you're putting on a strangle, time decays your enemy. You're buying an out of the money call and out of the money put. Every bit of that premium is extrinsic value, so time becomes important. That's why we look for the ADX to be so low, because the lower the ADX gets, the longer the stock's been consolidating. Hence, the likelihood of a breakout is sooner rather than later. So, the longer it consolidates, the less time likely there is before it breaks out again. Especially, one of the rules, when you look at a stock that shows that it's moved in the past. You don't want a stock that just goes dead sideways. It's not a good stock to put a strangle on, even if you get some sort of a triangle formation. Putting the Elliott wave pattern on, it's not in a 5-wave pattern, so that's constructive. And then it looks like we've had a pretty darn good zigzag pattern here too. Look at that one, look at that. Absolutely perfect. Now you picked this one, I didn't pick this, so don't give me any Monday morning quarterbacking stuff. So we have 38% fib wave B correction. When you have a 38% correction, your target is 61.8. Remember that from the trade scan series? So boom, that's where we go. So that's right there. Absolutely perfect. This could not be more. Nice call. Who picked this one? Jason. Nice call on the highlighting on the powers of Elliott wave right here. A perfect zigzag pattern, hit its target dead on the nose and then consolidated. Exactly what's supposed to happen. Textbook stuff right here. If we could get a quiet day tomorrow, that could be a really good strangle. And I say quiet day just because of the ADX getting below 13. As long as it doesn't explode up or down tomorrow, that could still be a really good strangle, a really good one. So great call there. I'm glad we looked at that. Micron. What's the symbol on Micron again? I should know it. Remind me. MU. Is it MU? Yeah, that's it. MU. Oh yeah, sorry. The Cummins, the one we just looked at was CMI. I forget. Again, next week we won't have to do that anymore. So Micron symbol is MU, and so we had pretty nice triangle here, but we're a day late, $1 short on this one, aren't we? Because we had a breakout to the upside today, a 5% breakout out of that triangle. And see, there's one that I was talking about. It wasn't on the search because the ADX never got below 13, but it still broke out. And that's what I was just saying, that stocks don't have to have an ADX get below 13 to break out. They can break out of a triangle pattern at any point in time. I gave you the reason why we look for those with 13 though. So that's the important thing. But looking at the Elliott wave pattern, we've broken out wave 4 corrected right at the 38% fib level, and we could do a zigzag on this one too and see. Yeah, so coincides right with the Elliott wave 5 pattern. The target price would be right around 60 for Micron. If, big if, you know how the triangle rules work, right? You have to have a second day, a follow-through, or confirmation day. That's ultra important. So if you get a follow-through day tomorrow, then the likely next target for Micron is 60. If it falls back down, then you have to regroup. Are we doing something else? Could we still come down and make a lower wave 4? We could, because we're right at the 38.2% fib level. But depending on what happens with Micron tomorrow, that would be your likely target, which is still a pretty decent move. That's still a 10-point move out of a $50 stock. That's a pretty good move. So y'all picked some really good ones to look at tonight. So thank you for your attention, and hope you have a wonderful week. And happy 4th of July. Happy birthday to me. And we'll be back to talk to you again next week. Take care, everybody.